Hey guys, I'm not sure how interesting this video is going to be, but I wanted to look over my returns for the first half just to kind of get an idea of where I was at and what worked out and what kind of things I did right and what kind of things I did wrong. Now, I don't usually follow my portfolio results very closely. I look at more individual moves that I make and figure out, what did I do right there? What did I do wrong in that particular trade or purchase or sale? My belief system is if I do that per trade, then that will lead to good portfolio results. Portfolio results can be thrown up or down based on just short-term movements of things that make no sense. So I don't think stuff like tracking your portfolio every few months or whatever makes a lot of sense. That being said, I was curious too to see how it worked out. And so I calculated my results here, and it looks like the return I was down by 0.8% for the first 6 months of the year. So when I saw that, I was pretty happy because that's ahead of the market returns for the period. But it also shows that some of the ways that I was planning on coming into this year paid off. I came into the year in a fairly defensive position. I was really worried in 2021 about the crazy multiples that were going on in a lot of the market and just leading to general high multiples everywhere. So I was very defensive coming into this year at high cash component, and also I was mostly invested in stuff with very low price earnings multiples or price to cash flow or whatever the sort of best metric I could see was, generally like below 10 times earnings, and that seems to have paid off in some ways. So what I'll do is I'll go through some of the individual items in this year, and what I'm trying to do is I'm trying to find lessons that I can take forward in terms of to make me a better investor here. So if we look at the results here, one of the reasons why I didn't lose much money in this period was because I had a big position on, well, it wasn't big, but it was, I don't know, 8 or 9%, maybe 10, in a company called Delek Group, which is an oil and gas company in Israel. And like all oil and gas this period, it did really well. It was up almost 90%. And then I sold it actually close to 500. And the reason I did that was because I don't like holding cyclicals or commodities when the price of the commodity is really high. It just does not sit well with me. And so I got rid of it so that I could buy stuff like StoneCo and ASOS and things like that during the half year. Now, that result is a bit of a trick. I'm not actually up 90% on that position. I had held this position since 2019, and the company totally collapsed during the 2020 mess, and they almost went bankrupt. And I ended up buying some when it was down, when it looked like they were going to come through the bankruptcy. So that turned out to be a good move. But overall, I wasn't up that much on the position. I haven't actually calculated what my net result was because there were some messy things going on with ADRs, and they canceled the ADR and I had to buy the Israeli listed shares. And so it became a big mess from a tax perspective. But in this half, that one really saved my bacon. Okay, so then if we go to Alibaba, so I don't think there's many lessons there. I think I did what fits with me. Sell commodities high and maybe look at buying them when they're low. That's sort of what my strategy is. So not much to learn there. Alibaba, if you can see the price of the stock was actually down between January 1st and January 30th. But my portfolio result was positive. So I had some wins here because of a trade, primarily because of a trade I made in March, where when the stock was down at 75 or so, I traded in a pile of my shares for long dated options. So I basically levered up there, and that turned out to be pretty lucky timing. But also, I would say it's a win because I had high conviction, and I was ready to make that move when it was available to me, and I didn't hesitate and made the move. So I think that's a win from an execution perspective, and so that helped with the returns this half as well. CEPU, that's Central Puerto in Argentina. It's listed in the U.S. I bought that in May 2019, and sorry, not 2019, 2021. So that was about a 9-month double. I bought it at about 2 and sold it at 4, just over 4 there. So that helped with the return as well. That's an interesting company because they're only trading at a few times operating cash flows still, even when it was at $4. But the problem is it's in Argentina, and it scares a lot of people away. So the win here for me was I bought into the fear of Argentina when I knew something was definitely cheap. So I went against the crowd, and that's the kind of that's the kind of investor that when I'm executing well, that's what I do. I go against the crowd and buy when there's mass fear, and that's what was going on there at that point. So I think that's a win. I took a quick double, and I'm happy with that one. Teva, now after the end of the quarter, it's up a bit more. It's up to about $10 because of the legal stuff, but this was also a win because I bought it at 3 times earnings or 3.5 times earnings, and it really withstood the market collapse because it was already so cheaply priced. And so that would be the advantage that's a margin of safety just from a multiple perspective, and that worked out well because I didn't really basically preserve my capital there during the market meltdown. Now, in terms of one more. Let's see, what other wins have I got? So Shinokin, I love this company. They have margins of safety all over the place. They have the market cap in cash. They're trading at 5 times earnings. They have a dividend. They have buybacks that are growing. This is a great company, and I think the win here was that I was confident in my position, and I added to it during the half, and it turns out that this was actually up for the half year, which again shows the advantage of buying something at a very cheap multiple, protects it on the downside. In terms of mistakes here, Prosus, Flow, and to some extent Alibaba as well. There's one of the mistakes that I make consistently, and actually I bought Sleep Number, and it's not on here, but I bought Sleep Number for a few weeks here because I was in the middle of researching it, and then I ended up selling it pretty quickly, and I lost a little bit on it. But the problem here, the mistakes I'm making, is I'm buying things before I'm finished researching them, and so those has created problems for me, and I'm losing money overall with this mistake that I'm making. So I did that with Prosus. I bought it before I fully understood it. I did a video on it. I explained why I sold it because I really didn't get to the point where I fully understood it, and so I had to get rid of it, and I took a small loss on that one. But the problem is the purchase in the first place. That was a mistake. Flow Traders, again, I just posted a video on it. That's same problem. I didn't fully understand it. I looked at the numbers. I liked the numbers, and I bought it. And I understood from a sort of high level, but not really in depth and in nuts and bolts. So that's one I'm going to correct going forward. That's one of the big lessons this quarter for me, or this half for me. Anything else I want to touch on here? ASOS, that one's down a fair amount this half, but in terms of my execution, I like what I did there. I just bought a small position when it was around $20 on the US market, and I explained in the video it wasn't really in my price range. I think it was trading at 20 times forward earnings, which is very high compared to what I normally buy. But I like the company, and I executed well, I thought, because I waited for my price. The stock eventually got into my buy range, and I bought. a lot more as it went down here. So that's I think that's a win for me. I'm following the strategy, my strategy well with that one. And so even though the stock's down, I think that's a win. So one of the things that I would say here is, if something goes up, that's not necessarily a win, and if it goes down, that's not necessarily a loss. You know, I used to play poker a lot, and it's about playing correctly, right? You can't win all the hands, but if you make a bet and you have outsized pot odds, and you have the correct odds to make the bet, that's a good play. Even if the cards flip over and you lose, and if you made the right play, if you make those right plays over the long period, eventually you're going to win. So I think that's a lot like the market here. I would say that mostly I was playing the right way from my own perspective, except from what I talked about in terms of buying before I fully understand. So so that's pretty much it. I guess I can go over AFL and Cerritage too. So AFL, again, bought this at a very low, what I thought had a big margin of safety. It has a huge growth rate, you know, growing, I forget what the number, it's like over 100% a year, and it's, you know, trading at, I think, in the teens in terms of earnings. So you have a really strong PEG ratio there. And so I think that protected it on the downside, as well as the company is only down 5% in this half of the year. And then Cerritage is one that one's down significantly, and I'm actually fine with the holding, but the mistake that I made was that I was using an anchoring bias. So I was looking back at previous prices and looking and saying, okay, you know, Manish Pabrai bought here, so that means it's a good price. So that's anchoring to old prices, and I don't think that's a smart move. We should be making moves based on the valuation and the assessment of the intrinsic value. It ended up working out, as we know, Cerritage, I think, is at 12 now, and I did average down at during the quarter when it fell into the $5 range. So that was a good move, but overall, my initial purchase was not great. There was some other stuff going on. There was currency effects here, what made me lose 1%. That was mostly on the Delect Group cash that I had held after the sale. The Israeli the shekel fell significantly compared to the Canadian dollar, so that hit me. I'm not too concerned about that one. But yeah, the net result, 0.8% down. I'm happy with that result. It means I've survived the first part of this bear market, and I'm quite happy about that, and it shows that my defensive position worked out well. Now, just final thought here on that is, if the market had actually gone up, I definitely would have underperformed the market due to my defensive position. So I'm not sure if I'm going to outperform if the market goes up, but for now I'll take the win. And yeah, if you have any comments, and if you think of anything else that I may have done wrong here, then please let me know, because I'm in this to try and become a better investor. So I'm happy to take the critiques and the input. Anyway, I hope you guys got something from that, if anybody's still watching. But yeah, have a great day, and we'll see you in the next video.